Hey traders, Cousin Vinny coming to you on May the 4th, Sunday, with a market read and a watch list for the coming week. Well, the Dow Jones and the S&P 500 are both at highs, and most of the earnings have been reported by companies on the big cap index. And lately, I am watching seasonality as it just starts to kick in. Bonds typically outperform equities during the summer months, as you know, and with the Barclays Aggregate Bond Fund rallying 2.67% since January, and the 20-year bond TLT has rallied 12.51% in the same time period. Now, I would expect there's a possibility we could see some consolidation here at highs. If you look at the weekly chart, the vertical lines on the weekly are the summer months, May through September, as we can see here. And for the past 4 years, the only year that was negative on CCI, shown here, was last year. The previous 3 years were all above the 100 line on the CCI indicator, as we can see here, and prices continue to move higher, and building a flag here and then moving higher into September. Now we're starting to see that already with strength since January inside of this Bollinger Band squeeze, and prices continuing to move higher. Now prices are starting to get above this Kirby level, so I would expect the TLT could flag here, move back a little bit inside of this Kirby level, and then move higher, just as seasonality starts to kick in, as we've seen here in the past. Now, this particular spike right in here coincided with the riots in Greece over austerity. Considering the turmoil in Ukraine and Russia right now, specifically Russian separatists in Ukraine, one could expect that this could be more explosive than a riot over jobs and austerity. So I'm expecting bonds to continue to move higher as people look for safety. Now the other thing that many have mentioned is that with the jobless claims data recently, non-farm payrolls, that more baby boomers are dropping out of the market, and they are less interested in investing in equities and more interested in bonds and the dividends that they pay. So that could be an additional supply of buyers as well. So I'm keeping that in mind as we go into the summer months with regard to TLT. Now AGG, the Barclays Aggregate Bond Fund, is what many fund managers use as a benchmark on their bond funds. Now I trade VBTIX, and this is directly benchmarked to AGG. You can see that we had this larger cup and handle that's now moving off the screen, and this shorter term cup and handle that played out to the upside, as you would expect, being it's a continuation pattern. Now if we look at VBTIX, I noted here from my own records when I started trading. Now this is back in January when I took my first trade when TLT first broke its several month downtrend, and I've since been adding to both our funds as well as the kids and the wife. So you can see that we're continuing to move higher on VBTIX. Again, this is a Vanguard Total Bond Market Fund Institutional. I believe you have to have over $2 million to invest in this particular fund. There are several others that Vanguard has that mirrors what VBTIX trades. So just keep that in mind. This is an Ichimoku chart of the 30-year bond, which Yukarowitz has been all over last week. So you want to keep an eye on the 30-year bond, which continues to see buying. Note the volume that we saw last week. This is a daily chart, and note the volume on Friday and the number of days that we saw above average volume on bonds. Okay, just consider the fact that we have a double bottom here. We've broken through Kumo. We had a Kumo breakout. We came back and tested Kumo and Senkou span B kept prices above, and we continue to see a bullish action now. Note where Chiku is right here. This is definitely a bullish chart, and adding to this, the thesis that bonds are going to continue to move higher into the summer. So you may ask yourself, why am I so bullish on bonds? Well, you can check out Yukarowit's site, The Fat Pitch, which is an excellent weekly summary, among other things, that he posts, where lately he's talked about over the past 10 years, we've seen sizable drops in the major indices, right, between May through October, with the exception of 1 year. Now, that equates to a 90% chance of a downside move on the indices during the summer months. So I would definitely take those odds. Now, if you go through some of Yukarowitz's posts here, the charts that he refers to, the one that really sticks out to me is seasonality, and the S&P 500 is likely to do over the summer months, this being May. Now, if we look at the number of bullish traders out there, fund managers, we can see that we have a very high percentage of bullish fund managers. Add to that where EPS, earnings, and valuations are, and the fact that valuations are reaching levels that we saw back in 2000, just before the dot-com collapse. You can see that as prices continue to move higher on the S&P and the Dow Jones Industrials, that we are at levels that we could see and move lower. As the number of bullish setups dwindles at highs, there are less catalysts for a continuation move to the upside. So you have to be aware of the fact that we are at a triple top on the industrials. It's only 30 stocks, but something that you need to consider if you're thinking about going long going into the next couple of months. What are the probabilities that this trade will work to the long side? Now, this is a chart of the S&P 500, and for the most part we're moving sideways. Now, we could chop around in a range and produce a sideways price action going into the summer. That's very plausible for the S&P 500, and not something I'm willing to speculate on currently, considering where all the indicators are pointing. The other thing one needs to consider is that we need tech stocks and the small caps to cooperate and continue to perform if we want to see higher prices on the indices. With regard to the NASDAQ, we can see that we're playing out the possibility of a head and shoulders top. With this broadening pattern, prices closed below this upper trend line of this broadening wedge pattern. With regard to the Russell, we broke out of this ascending pattern back in late March, early April, and we've since been yet to recover. Trend line breakdown here, we retested and fell further, and we can note that we've been stuck between this pivot high and this pivot low. The Fibonacci levels were down below 618, so that's showing a weaker market than you would want to see if you're bullish. This is a chart of the DBV Deutsche Bank Currency Harvest Fund, the carry trade. If you're bullish equities, you want to see this continue to move higher, and if you're bearish equities, you want to see this fail at this previous flag that we put in during the month of April. We do have something of a box trade here on the carry trade, where we came down, we tested this range here between the 10 period, the upper blue line, and the 30 period, the lower red line, and we since bounced. So we want to see this continue and take out these highs here and move into this zone here for the carry trade to support higher prices on equities. Now, it doesn't mean we can't decouple the correlation because we have in the past, but it's something that I'm watching as an indicator. Note MACD and stochastics. Stochastics is already starting to reach an overbought zone, so this is something I'll be watching pretty closely this week. This is a chart of the US dollar Japanese yen cross you can see the same pattern here where we moved up during the end of 2013. We flagged out, we moved higher in May. So we've got to be watching the carry trade for any clues for the equity markets in the short term. So let's take a look at some chart setups. This is a scan that we ran for the weekend close on Friday, and this is a Bollinger Band squeeze scan for 503. Sorting this from a scooter perspective, we can see what sectors have strong candidates. Note Tesla, Garmin, First Solar, Vulcan Materials, and so forth, Baxter. And then we can sort this by sector, and then we can start choosing some of the names that we like in the Bollinger Band scan. Now, if you don't know the Bollinger Band scan, you can go to my site, theclosingprint.com, and right here at the top of the page I have two really good tutorials on the box setup that I mentioned on the carry trade, as well as how to use this custom scanner that we've put together in the last several months that we've been posting on the blog. So let's take a look at some of these setups. In the healthcare REIT group, this is a specialty REIT. HTA has been on the scan before, and we noted this in the blog post that the last time this squeezed in here and also in here back in February, this trade continued to perform. Now we built a Kirby level here and prices are above that level. HTA reported on 429, so we can see that nice move. We have nice volume here, pocket pivot back in March, and prices continue to move along the 10-period EMA and the upper Bollinger Band. It touched the top of the Keltner channel. If we look at standard deviation, we can see that we've touched the third standard deviation. So I'd expect this to flag out and give us an opportunity for another re-entry on HTA. Checking FinBiz for HTA's short present. We don't have a lot here, only 1.15%. That's likely covering as we speak the end of last week. We can see that the EPS rating is 75. It could be better, but what it does tell us is what the leader in the group is. So we might want to check this chart out as well, ROIC. But suffice to say, this has 83 EPS rank. Suffice to say that HTA does look good considering it reported earnings and they were well received. So I'm not sure what the forward guidance was, but this could flag here and render an opportunity in the near term. Invesco Mortgage Capital is on the list as well. It's been on here before. Note the 50-period moving average, the green line, and the price run that is being consolidated currently from 1351 up to this high of 1693. We're moving sideways. Came and touched the 50-period moving average on Monday, Tuesday, Wednesday, and note Bollinger Bands are squeezing. This is a nice setup with TNX continuing to weaken. This is bullish for REITs as the yield continues to drop. Now we do have multiple lows here. We're going to watch this low here at 25.79 to see if we come down and break through that level. It looks like we tested it on Friday. So any of these REITs will perform better if yields continue to move lower. You note the notes I have here on who benefits, who doesn't, on a flattening yield curve, rising yield curve, and so forth. And you can see utilities, which also pay good dividends, have rallied for a good amount of time while TNX has been moving sideways. Now it's breaking down, so you can expect this to resume a move higher, possibly on the utilities, as well as these two here. This is the REITs chart, and this is for builders. Builders tend to do better with lower yields. Spirit Realty, SRC, prices are above a Kirby level here. We note that it broke a little bit of a trend line price action over the last month. and we're expecting to get back up here at recent highs. Now, Keltner channels for the most part is going sideways. We want to see this turn up as we saw here, confirming a move to the upside. Note the MACD cross, and stochastics has led the way higher. I'd like to see more volume though. UDR, United Dominion Realty Trust. We want to see this continue, this breakout of this triangle pattern. You can see Keltner is already starting to turn higher. Keltner is derived by ATR of a stock plus a moving average. So when this moves higher, you want to be long, and when it moves lower, you want to be short, as you see here and here. And when prices are moving, when the Keltner channel is moving sideways, you want to play the upper and lower Bollinger Band. Note MACD cross and really nice volume for 5 days straight on this name. Baxter International, a healthcare name in the medical supplies. We pointed this out last Thursday, and we can see that we had a nice move above this upper trend line, the 74.11 level, and now we're testing that recent high at 75.68 as Keltner channel points higher and prices continue above this Kirby level. Note the volume and the MACD cross. We had minimal momentum to the downside, and most of it was to the upside. So we'll be looking for continuation if momentum picks up on this name. They did report earnings last week. I don't recall off the top of my head how much they beat by. This is a chart of Tesla. Earnings are this Wednesday. Note that we're just starting to try to break out of this descending channel pattern, and Keltner channel is moving sideways, and there's really not much of an edge in here, but we do have a Kirby in between price action currently, so just remember earnings are on Wednesday. The weekly chart looks good as well. Came down and tested the 20 period moving average and looking quite bullish. Unless they miss, this could continue to move higher. Cousins Properties, CUZ, another REIT. We can see a ascending triangle pattern here off of these lows at $9.87 up to $11. Had a nice appreciation prices, and we're consolidating that move, looking for a move to the upside with higher volume as Keltner channel continues to point the way. DLR, Digital Realty Trust, another name that looks pretty good in the REIT group, one we really like in this current environment. If prices get above the Kirby at 54, this one could signal a breakout move higher. The fact that Bollinger Bands are tight tells me that a move is coming soon. We're testing these highs here, and we see MACD moving sideways. So not the best setup currently, but a break above these highs here could confirm a continuation move higher. Note that Keltner's been moving sideways for the most part, but the lower Keltner channel is starting to turn up, or has been moving higher, and the upper Keltner channel is starting to turn up. Garmin has showed up on the scan several times over the last couple of weeks. We see that price action tried to break out of the upper Keltner channel, which is the standard deviation as well. Yeah, we tested the standard deviation 3, and prices reverted back to mean. Now, we did test the breakout level, and we had a green candle on Friday. So, considering the volume, they had earnings on Wednesday. They beat by a penny. So we're watching this one going into the week with a MACD cross and nice volume. And that's Garmin. Okay, so that's going to do it for me for now. I may add some more setups on the blog. Do note that we like to try to trade the top 10 best chart patterns as tested by Thomas Bukowski on his site. You can check his site out. Go to thepatternSite.com. High and tight flags are the highest rated patterns, so you want to check that out if you're serious about trading. You definitely want to trade chart patterns that have a higher statistical probability that continuation. If you're bullish, and what those odds are if you are bearish. So trading patterns that work the best make the most sense, logically speaking, but many traders don't aspire to that concept for lack of not understanding that some setups are better than others. Anyway, I hope this helps. This is Cousin Vinny coming to you from theclosingprint.com with a look at the week ahead and a watch list. Take care, and we'll talk to you tomorrow.